All right, ladies and gentlemen, hello, and good morning. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. Look, this is a quick video preview for the webinar, which is going to happen in a few moments, so stick around. Hopefully you'll enjoy the session, because we're going to talk markets. We're going to see what happened this week. We'll wrap up the week. This is, by the way, the last full week of March, and yeah, we're done with it. And honestly, what kind of a roller coaster we had, that's for sure. Look, like I said, we'll talk about markets. We'll see what's happening with the charts. Just our regular, normal conversation. Feel free to drop a comment or if you wish, and we'll go from there. So I'll see you in a bit. All right, ladies and gentlemen, hello and good morning. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today, ladies and gentlemen, is Friday. Yes, the 27th of March. It's the last Friday of the month. So welcome. We made it somehow. With all the craziness that has happened during this month, honestly. On one hand, you're like you're wishing that or not wishing, you're finally happy that this month has ended, because it has been such a volatile month, and there was so much action, and there was so much uncertainty, and now we're kind of, on one hand, we're happy that we're stepping into a new month. But on the other hand, we're also worried, is this not going to be like even a worse month? Look, for now, I will say it this way. For now, we're watching, right? And I'll get to that point in a bit. I'll get to the indices in a moment. But certainly, yes, uncertainty is key right now, and many major central bankers are expressing that fear. So. Look, right, before we go any further, before we jump into the charts, let me just double check if everything is running smoothly here. I can see that, yeah, the microphone seems to be working. Let me just double check very quickly here everything. I think that, yeah, everything is working, because my OBS here updated, and there are not many changes in general, just the way the layout is. Yeah, it's, the not the usual thing that you're used to, the visual, but well, these things are needed. Now look, before we go any further, as always, yep, there is disclaimer. So the content we produce does not constitute investment advice or investment recommendation, and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. I'm just going to, like I said, do my final checks. Oh, by the way, I'm going to do my usual good morning in the chat room. Good morning, everyone, ladies and gentlemen. There we go. Okay, so, right, also just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. Also, big massive thanks to those who have participated in the webinar yesterday, and I think it was a great one. I've touched on risk management. This is the webinar here. I've touched on risk management, so I think we covered a lot of interesting topics, a lot of interesting, or actually maybe not topics, but little sides of risk management, and how to kind of protect yourself, how to position yourself. So yeah. Look, also just how to say it without. Okay, the website is finished. There we go. I kind of stalled there a little bit. The website, I've mentioned the website, I mentioned the risk disclaimer. Let's head to the charts. Okay, so ladies and gentlemen, good morning, 𝐒𝐚𝐫𝐚𝐫𝐤𝐞𝐲. Hey, good morning. Thank you very much. Actually, it has been a while that somebody said good morning to me on the show, so really, really appreciate that. Look, 𝐒𝐚𝐫𝐚𝐫𝐤𝐞𝐲. I'm gonna ask you straight away, because you've joined in, so hopefully you're gonna stay through the whole session, hopefully. But let me know, what's your favorite instrument to trade. because then, like I said, we'll analyze that one a little bit more. So this is what I encourage everybody to join in, to ask questions, because if then I can put maybe a little bit more emphasis on certain asset classes. So yes, 𝐒𝐽𝐻, can you tell me which, like I said, which instruments, or maybe just one instrument, that you like to trade the most? Well, I'll pick up on that one. Ladies and gentlemen, without further ado, let's jump into the economic calendar. Just a quick glance at what happened this week. Let me just refresh this page very quickly. So Monday, very quickly, let's run through that one. Monday was a little bit on the boring side. We had the consumer confidence, the flash, the estimate, basically, from the Eurozone. That came out as a bummer, a major bummer. Minus 16.3. Then we jumped into Tuesday. We saw flash PMIs coming through. We saw that's coming out from Australia, but for some reason it's not available here. I don't know, like the Japanese inflation, PMI numbers. Yeah, for some reason they're not available here. Okay, interesting. Okay, Japanese inflation number. Now this was interesting, and that went a little bit lower here, as I can see. The core 1.6. Yep. So on one hand, inflation seems to be on the lower side. However, the BOJ is raising concerns. Well, I do understand why, because the Japanese yen continues to devalue against its U.S. counterpart. I'll pick up on that as well. Yeah, going further down the line, we had what's happening here with the S&P Global numbers. Okay, they didn't come out or something? Let me just double check another source here. What's happening? Okay, the economic calendar, and this week. Okay, so where's that? S&P Global, yeah. No, they did come out. For some reason, TradingView did not update these numbers here. Okay, the Australian numbers, those came out on the lower side. Services 46.6 against the forecasted. Yeah, we don't even have the forecast here. Anyway, I'm going to tell you, 46.6, basically below, into contraction territory. From manufacturing, services, and composite, only manufacturing was able to remain in expansion territory. Yep. Only those two, only that one. The other two went into contraction. Well, that's not very good, I would say, if I can put it mildly. Okay, so by the way, gold and Nasdaq, 𝐒𝐽𝐻, gold and Nasdaq, perfect. I'll pick up on those. I'll put a little bit more emphasis on that. Okay, so yes, going down the line, we had again some missing numbers here, as I can see, from the S&P Global PMI figures, the flash ones. However, those did come out, and let's put it this way: the majority of them came out on the lower side, apart from maybe a few, like the Eurozone, European Union, S&P Global Manufacturing PMI flash numbers. So yes, okay. Let's go towards something that actually came out, because this is like a little bit annoying. Inflation number, in Australia here, inflation, there we go, 3.7, still on the higher side. This is the headline year on year. Now look, regarding inflation and regarding going into April, and the fear going into April, I said this in the beginning of this week and last week as well. Be scared, be aware of the April inflation number. A March inflation number, which is going to come out in April, basically next month. Now that's going to be an interesting number. And then we'll jump into May, because in May we will get the April inflation number. So it will be interesting to see if there will be some sort of like a heightened pattern. That inflation will be kind of rising. So the March inflation, I think everybody's waiting for that one. That's why I think the central bankers are now, let's say, sounding the alarm, because, well, the whole unnecessary conflict in the Middle East did put a big kind of caused cause a big problem. Of course, we understand that maybe the core inflation might not rise that much. However, everybody's going to be watching the headline inflation, which includes food and energy prices. So major economies will be delivering their inflation numbers in April for the month of March. So yes, that's going to be the interesting part of it, and to see if we're going to see some crazy numbers there. For example, look at this UK. This is the February figure here. Inflation headline year on year, 3%. That's as it came out as expected. Let me remind you that the BOE's inflation target is around 2%. The month on month, there we go, as expected, plus 0.4. But then again, the core did not really, this one does not include food and energy, and it comes out higher than the previous in the forecast. So there we go. We were already seeing services getting damaged in UK, and UK economy is already one of the more vulnerable ones from the developed economies. So this is what, like I said, this is what the central bankers are worried right now. And the UK's BOE is one of those banks that already is scrapping the cuts for this year, because initially we were expecting to see maybe like one or two maybe, but hey, thank you very much, the US and Israel for that. So well, this is what caused the whole conflict, and of course now everything is getting spinned in the news that Iran is kind of retaliating, not defending here anybody, but just if we're playing the kindergarten game here, well, you kind of started it, so because it looks like kindergarten right now. Oh, I'm gonna do this, I'm not gonna do that, and I'm gonna threaten you with this, I'm not gonna threaten. It's like, it's a big show, and really nobody asked why I'm frustrated about this, because nobody asked us, our opinion and what we should do with it. So long story short, for now, we're watching the inflation numbers, of course. This is going to be key going into April, because we're going to be getting the March numbers. Apart from that, from the UK, we got the PPI input numbers as well here in retail price index. Everything is a little bit on the heightened side. Germany's IFO business climate. Now that was a little bit of a disappointment, better than the forecast, but still a bit of a disappointment here. Okay, look, apart from that, EIA crude oil stock change, that's the US, that's increased here, higher number, okay. Right, look, apart from Wednesday, nothing major here. We had some key central bank speakers from the Federal Reserve, and those are, like I said, expressing their unhappiness with the inflation number. By the way, let me just double check what's happening with the FedWatch tool, because this is going to be quite important going forward. I mean, it's always important, but let's double check what are we pricing in right now. So I didn't look at it yet. I'm going to be probably surprised myself as well, but straight away I'm going to jump into December, because before we were expecting at least one cut, or something like that. But now, going forward, there we go, ladies and gentlemen. Look at the amount of these numbers columns appearing here below the current here, or should I say above the current target, above the current above the current interest rate. We're now expecting a hike. Even actually, okay, this, like I said, if we watched this last week, and we did look at it last week, we only saw just one potential hike, and it wasn't even by December. It was like something like April time. Now look at this. Okay, in April we're not gonna get a hike for sure, because I don't think that Jerome Powell will move. By the way, with Jerome Powell, we understand that he might not leave up until 2028, because, or basically he said that until the investigation is ongoing against him, he's going to remain as governor. So yeah, I think it's a clear statement to the White House, because basically if he leaves, he suddenly becomes this one as a mortal, right? Nobody cares about him, and then basically that he can be placed into, I don't know, like, he can go under more attacks. While he is as governor, any attack can be seen as a negative in the market. So basically, if you're like, you're attacking this person, the market reacts to that negatively, and you can be blamed for the stock market actually falling. So that's why I think it's a great move by Powell, in my opinion, because, well, again, we're playing the kindergarten here. Like, you started it. So, long story short, we'll see how it plays out. Of course, we're watching all these Federal Reserve officials speaking out right now. Fed Myron is one of those who's always in favor of cuts. And honestly, in this, how can you be in this position and still in these current market conditions still demand cuts? I don't know. Like, I mean, you have to be very, very sponsored by the White House. Of course, we don't know that. Anyway, so long story short, for now, we're watching, like I said, what's happening today. So this morning, already I can see that we had some speeches here. Jefferson, Barr, yes, everybody, like I said, everybody's expressing their dissatisfaction right now. Retail sales in UK, good, better than the forecast, but still not as good as previous. Anyway, what to watch out today? Michigan consumer confidence, is that correct? Michigan consumer expectation sentiment, Dario, coming out here, 54. The expectation is basically below the previous number. Okay, look, I'll say it this way. For now, still the focus is on the whole conflict in the Middle East, and and how it will escalate. From what we have learned recently, from what I have learned recently, that this week they were sending troops, around like 2,000 soldiers. The U.S. was sending around 2,000 soldiers. Apparently to capture Kharg Island. But now we're hearing reports that there's going to be like an extra 10,000. So yeah, it's an interesting moment where we're going through right now. So to invade another country. So one is allowed to invade another country. The other one is not allowed to invade another country. So that's the international law that we're living in right now. Anyway, let's see what's happening with the chart, ladies and gentlemen. Nikkei 225, we're seeing a little bit of a recovery here. That's fine. That's actually good because, again, I think that it's reacting to the 10-day extension that the U.S. has given Iran for, like, to kind of open to agree on some sort of a deal, basically. But honestly, it's like a deal which is favorable for the U.S. It's not fair. It's not good for the Iran. So if you want to make an agreement, you basically need to kind of, you need to have, like, both parties need to be satisfied. That's why it's called an agreement. But it doesn't work that way in our world. Anyway, so looking at the technical picture here on Nikkei, it's holding up. It's holding up above this 52,500 zone, so that's in a way great still. It's proving as that this is a good area of support. That's why if we do fall below it and we fall below the 100-day EMA shown as the blue line here, then yes, I'm going to lean a little bit more towards the downside. If I'm not going to get that, I'm still not excluding the upside scenario. Now, one thing that I'm seeing here, and potentially I'm wondering if this is going to work out or not, a possible falling channel, something like that. Let me just double check if this is going to be the case. Ish. It's not a picture perfect one, I would say, so it's kind of stuck here. So, but either way, if it is a weird falling channel pattern, then I will wait for a break of the upper side of it before kind of getting comfortable with higher levels. And the only thing is that, if you're not comfortable with the falling channel, I totally understand you, because again, it's not the picture perfect one. What you can do here is keep your eyes on the 50-day EMA shown as the green line here, which somehow continues to provide good resistance. And if we do pop and stay above it, then maybe this could, attract more buyers. But we saw something similar happening here. We pushed higher, we closed above the this 50-day EMA, and then boom, quick straight away to the downside the next day. So this is what I talked about in my yesterday's webinar, basically, because all these standard models at this point, or your trading models, might not actually work. So what I'm saying to you right now is I'm applying the kind of the standard technical analysis rules. However, it comes with a little asterisk where I'm saying that during these current times, I would say you need to be quite cautious, and you need to be a little bit more on the careful side, because look, standard models tend to kind of fail, and when you have like stupidity, which is happening right now, because we're not doing normal technical analysis, we're now doing tweets. So yes, tweets, or should I say truths. We're doing truths, and you need to trade on that. So we still apply technical analysis, hoping for the best, but at the same time, you have to acknowledge the fact that your technical analysis, you can scrap that straight away and throw it into the trash, because a single tweet can just destroy everything in a way. So anyway, long story short, Nikkei, for now, I am looking at this from the technical perspective. I am watching this this barrier right here, the 54,100 and what's it, 75 here. And if we get a nice clearance of that, we at the same time automatically we jump above the 50-day EMA shown as the green line, and we jump above the 20-day SMA within the Bollinger Band. So if we push above all that, great, more buyers could join in. However, I have to say that while we remain inside the pattern, inside the falling channel, the trend is still to the downside. That said, for me to get a little bit more comfortable with lower levels, a drop below the 100-day EMA here would be required, shown as the blue line, by the way. KOSPI, the Korean index, very quickly. I'm not going to spend too much time on this one, but just wanted to see what's happening. Rebounding beautifully from this upside line. Now, initially, I had this as a very tentative upside line. This, by the way, idea for a rising wedge worked out nicely. We can get rid of this. We can get rid of this line. Actually, you know what? No, we're not going to get rid of this line. We are going to recycle it. Always recycle, ladies and gentlemen. And I'm going to draw this downside line. Now, it's a tentative one. Don't get me wrong. We're trying to find some sort of logic here. So what we can see here is that we are stuck in a coiling up moment here. We're stuck in a triangle. And that means that for now, we're not touching KOSPI until it breaks through one of the sides of this triangle. Shanghai Composite, beautiful rebound from the 200-day EMA, fantastic. It's holding up nicely. We're pushing back up. Look, I'll say it this way: if we somehow climb back above the yesterday's high here near the 3,937, then yeah, I'm going to consider a bit of a larger correction back up here, but only up until the 100-day EMA, or towards the psychological 4,000 zone, something around there. If we can get that move, great, wonderful. I'll go to the upside. By the way, 𝐒𝐫𝐚𝐫𝐤, if you're still watching, then yes, I'm heading towards the Nasdaq right now, and then we're going to talk Forex, and then we're going to jump into commodities. So. Long story short, Shanghai Composite, yes, this is my game plan. However, if we do fall below the 200-day EMA, yes, I'm going to lean a little bit more towards the downside. That said, I'm going to get a little bit more comfortable with lower levels only if we fall below this highlighted zone right here. This was a key area of support. It acted as a good area of support. Kind of this area is roughly between 3,800, 3,816. So if we clear that, I'll go lower. Right, okay, Dow Jones Industrial Average. Yesterday, what happened yesterday? We were negative yesterday, yes. There was a little bit of recovery I saw, but still, no, it was a straight line. Sorry about that. No, I thought recovery happened after hours. Yes, I was watching this when the market was closing. I saw that there was a little bit of a spike in Nasdaq. I was watching Nasdaq. So yeah, look, Dow Jones Industrial Average yesterday declined after failing to push above the 200-day EMA right here. It broke this downside line, but actually it's now like getting messy. So this is one of those moments where we have to get rid of the downside line because basically it's just in the way and it's not getting respected. So what is getting respected right now is the 200-day EMA, shown as the white line. And if we do here push above this area, above this 200-day EMA, the fourth, somewhere above the 46,675 zone, yep, I think there could be more buyers joining in. Let me double check. Let me quickly double check where we are at right now. The Dow Jones Industrial Average 45,900 and oof, is that correct? Yeah, 45,980. So we're basically around the same level where we closed yesterday. Right. Okay. Look, long story short, for now, I am being a little bit more on the careful side, I would say. I am watching this, like I said, we are seeing some weakness. However, I'm looking at the cash index right now in the Dow, and something looks a little bit more like a bullish flag to me, but again, I don't want to rush into conclusions yet. So look, in general, this month, look at this. We were wiping out gains of how many months? 1, 2, 3, 4, 5, almost 6 months of gains. So we started off here in September, rallying, and look at where we are right now. In general, I think that we could end up traveling all the way back down here towards the 45,000 mark here. I think that's quite doable. But again, let's not rush into conclusions, okay? For now, let's just be a little bit more on the careful side. If I'm looking for some lower levels, I think I'm going to just play the safe game here, and I'm going to wait until we drop below the current lowest point of March, near the 45,369. I know we're missing out on a lot of territory. If you're a little bit more comfortable with kind of getting a little bit more, exposing to yourself to a little bit more risk, 45,800. If we do fall below that, I think yes, we could see further declines as well. But again, there is a problem then that we could see like a stalling moment somewhere closer to the 45,369, but like a failure to test it, and then you basically end up forming like a higher low, basically a potential for a bit of a reversal. S&P 500. S&P 500, and yep, this one is dropping like a fly, and there we go. Look at this. This is just major move to the downside yesterday. Yesterday, the S&P did lose, but Nasdaq was the biggest loser. But S&P was all somewhere in the middle. Nevertheless, look at this. It is dropping lower now. It is. I'm going to watch this level right now. This is the current lowest point of this month. During the official trading hours, I would say, because these are not the futures, this is not the cash. What I'm watching here, the 20, this is the lowest point, the current lowest point of this. Wait, just a second, 6,473, 6,400. Yeah, this is the lowest point, which was reached on the 20th. Okay. The S&P right now, 6,482. Yep, a little bit above this hurdle, but anyway, look, I will say it this way: if this holds, okay, maybe we could see a little bit of a rebound. But if it fails, honestly, I cannot say anything else apart from a forthcoming lower low will be confirmed, which could open the door towards these levels right here, 6,360 to 6,344, and we'll just kind of take it from there. Nasdaq, ladies and gentlemen, Nasdaq. Okay. Yes, major declines here. Look at the monthly chart, honestly. There we go. I mean, Nasdaq started declining a little bit earlier already. We could even say it was an indication. Look, I want to get rid of all the drawings and have a fresh look. So I think that we're going to end up traveling towards that kind of 22,000 zone, something like that, around maybe 22,000 and a half zone. So yeah, I think that that's quite doable this month. No, I don't think so. I think that we're going to leave something for the next month, because I don't think that the madness in the Middle East will kind of stabilize somehow, unless, I don't know, if they all back off and just kind of, allow everybody to live as every, there were no issues before. Like, if you were talking about the Strait of Hormuz, it was flowing. It was all going smoothly. There were no fees applied. There were no. But then you know, these two countries decide to attack Iran, and of course, you know, for you will retaliate. If you attack me, I will retaliate. So, you know, how to say it? I don't know. Like, I mean, is this like that difficult to understand or something? Like, I mean, we're all pretending, we're playing the pretending game of some sort, you know, and there were no issues, there were no problems. Iran didn't have like you know weeks away from developing an atomic bomb, you know, or nuclear bomb, and yeah, it's has been the rhetoric for several years, you know, now, because it was always weeks away. But anyway, so yeah, for now, like I said, it's a little bit strange, you know, like, and I don't think that this is gonna end, because I think the goal is different. I think maybe we're here to cause more panic in the market. We're here to cause more, you know, correction, because if we need to see the stock market pushing higher, then, you know, when we were at these levels, you cannot continue pushing higher, because it just doesn't make sense. You know, there's no, like, the valuations were crazy. So now you're creating a nice you know, you're creating a nice correction in the market. Basically, this is one of the goals, in my opinion. I think, because, you know, if you want to continue investing in the stock market, well, you need some sort of a reset, and you cannot create a reset by just, I don't know, either it's tariffs, but then tariffs stop working. Last April they worked, so we were also, you know, this is where, like, we were last April. We were also flying high here, for example, in Nasdaq. Here we were also, you know, hitting all-time highs, high, and boom, boom, there we go. And then, you know, April hits, and there we go, tariffs. You know, so this is, and then from here, it was a great reset, and then everybody rallied again. So once again, you know, we rallied, we hit these new all-time highs again. You know, you're trying to justify valuations, this whole AI spending, and I think that now this whole conflict is kind of a distraction from, you know, from the tariffs, from the Epstein files, of course, as well. You know, we understand that, and certainly, yeah, it's just a little bit of madness here, you know, everywhere. So, long story short, oh, what did I want to say? Oh, yeah, I forgot. Yeah, anyway. So yeah, for now, like I said, long story short, for now, like I said, we're expecting a little bit more, you know, correction here to the downside. And if I apply my beloved Fibonacci retracement here on this one, then you'll see that we already did the 23.6. So maybe the 38.2 is actually our next good target. And by the way, did I say to you 22,000 and a half? There we go. All the stars have aligned perfectly. This is a good target, 22,500. I think this is something maybe for next month. Let's see if that's going to be the case. Okay, so ladies and gentlemen, let's jump into the German index DAX. Okay, by the way, Kinuthia, I don't know if you had a different opinion on this, but just you know, what's your, if you're trading Nasdaq, what's your take on this? I'm just curious to hear. The German index DAX, yes, drifting lower a little bit. The index is open, and we're seeing, yes, some weakness here. Look, in general, it's fine. It's still okay. Still holding up. Look, for me, I'm going to get more bearish if we do fall below the 21,863 here. And if that happens, then yes, a forthcoming lower low will be confirmed. The FTSE 100, yep, the FTSE 100 is an interesting one here as well. We fell. We're kind of falling here. Oh, there we go. We're falling below this inside swing high. Okay. This is interesting. 9,972. I think this is a good area to watch. So yes, if we do remain below this 9,972, yep, further declines are possible. And I think that we could end up targeting the 200-day EMA. Overall, of course, we're below this downside line, which is a little bit on the tentative side. So but nevertheless, if you want to go for some higher levels, then wait for a push above somewhere here, above this 10,118, something like that, and then we'll just kind of take it from there. CAC 40, just a quick glance. Yes, also a slide a little bit, but again, looking at this picture, you know, if we look at the short-term picture here, it seems like more of a like a bullish flag or something like that, you know. So yeah, it could be the case. Maybe going into next week, we could see a little bit of recovery, you know, because again, if we're leaving something, you know, like a little bit of a sell-off moment for next month, then yeah, it would be quite logical to see maybe a little bit of a recovery going into next week. So let's see if that's going to be the case. DXY 100 again. We're rebounding perfectly from this upside line within the range, by the way. So we're rebounding here and we're traveling towards that 100.5 zone. Again, let's see if this is going to be the case, if we're going to end up traveling and hitting that level again. But I will say it this way. I said it before and I'll say it again, that this U.S. administration does not, well, it needs the stronger U.S. dollar right now before the midterms, but overall it does not need a strong dollar, and it doesn't need an expensive, you know, barrel of oil, because oh, cryptos are selling off a little bit here. But you know, this is, like I said, this is the interesting part. I mean, and I'm really curious to see if we're going to actually break through that 100.5 zone, because in general, maybe yes, it will please the U.S. consumer and kind of make their purchasing power a little bit better. You know, those holidays are going to be less expensive abroad. But overall, I think that it will get back to the downside, just because the U.S. administration wants to attract more businesses into the U.S. They want to, you know, force them to build factories in the U.S. and yeah, it's like you know, for that you don't need a strong dollar, because you need to export from the U.S. So nobody's gonna buy if you're, you know, if the exchange rate is ridiculous. So yeah, it's an interesting one. I would say it's a really interesting one, and for now everything's pointing a little bit more towards the upside, of course, sure, but let's see for how long. And for now, I will be a little bit more on the careful side. I would say I'm not gonna rush into any conclusions yet. So let's see what's gonna happen here. For now, like I said, it's pointing higher. Everything looks a little bit more positive, I would say. But let's not forget that we're still within a range, right? And the upper side of the range could still hold, as it did recently, because the prevailing trend before getting into this range is to the downside. So the greater chance for this one, according to all the TA rules, is to break out lower. However, we still need to go to that low side, you know. That's why we're not excluding the upside scenario yet, because we're very close to it, to the upper side of the range, because again, the breakout could happen eventually. But let's like I said, let's not rush into conclusions for now. Okay, I'm just watching the cryptos right now, just kind of having a bloodbath. Right, yes. Okay. Anyway, it's very interesting right now what's happening in the crypto world, for sure, and it's just, yeah, it's crazy, I would say. The VIX, yes, inflation. Oh, sorry, inflation. Volatility is pushing higher today. Right now, we're seeing that as well happening. So let's see what's if this can be sustained. If this can actually reverse somehow back down. But at the moment, I think that yes, the market is experiencing some negativity, and I think that this is what's currently forcing volatility to push higher. Basically, the fear index. Nobody knows what's going to happen. Anyway, AUDJPY, ladies and gentlemen, very quickly on the Forex side. Yes, this one's pushing. It pushed lower. But honestly, right now AUD is suffering, because it's not that the Japanese yen is stronger. No, it's the AUD that's the problem. Although, you know, the central bank is raising rates, it's not really helping the Australian dollar, because again, because at the moment, I mean, this is a commodity-linked currency, and you know, it drives on sentiment. When the risk-on environment is present, then AUD is kind of benefiting from all that. Anyway, so AUDJPY, yes, this is something that we're watching carefully. We found good support near the 50-day EMA. If we if we drop below that, then yes, I'm gonna lean towards the downside. AUD USD very quickly, also a big decline here. Yes, we're near the 100-day EMA. If we can get a nice clearance of that, I will go lower. I will go to the downside here, ladies and gentlemen. So, okay, let's jump into Euro USD very quickly. By the way, yeah, I can see well shorts looks very probable with the current issue. Yeah, of course. This is, like I said, this is the world we're living in right now. Anyway, Euro USD, but thank you very much for your comment. Really appreciate that. Euro USD, we're dropping lower. We're approaching this upside little support line here, drawn from the 16th of March. So let's see if we can break that. If we can break that, then yes, I'm going to lean towards the downside. Very simple. I have a very simplistic approach here on the Euro USD side. And also, if you're looking for some higher levels, honestly, I prefer to start my upside scenario on a break of this downside line taken from the high of the, or should I say, the current highest point of this year. GBPUSD, now this one is an interesting one. Very much, kind of pushing back into the falling channel here. I talked about this. The only thing is what I want to do here is I want to start fresh. I think that the falling channel is no longer needed. This is what you need to do when a certain pattern stops working. So now what I'm watching is this. These are my breakout points for the upside and the downside. And honestly, I know that it's in a wide area here, a very wide area, so we could be missing out on a bit of territory. That said, I rather be a little bit more on the safe side, and I rather be, a little bit more on the careful side. So I don't want to rush into things, and I just want to kind of approach this with caution, because again, we know that there's instability with the BOE, because again, now they're shifting their attention towards rate hikes. This could, in a way, potentially benefit the British pound. That said, again, subject to what's happening in the world, I would say it this way. USDCAD very quickly. Okay, oil is elevated, but now I think that it's stabilized and it got adjusted. So we're not seeing that major, the Canadian dollar is benefiting that much from the higher oil prices. So what we're seeing more is it is the US dollar dominance play right now. And again, I do kind of stick to that point, which I said, that until probably the midterm elections happen, I think that until they finish, I would say, I think we could see the US dollar kind of on the elevated side. Then we'll shift to maybe a little bit of a weaker dollar. We'll see. Anyway, USDJPY. Now this is what the problem I talked about in the beginning. Bank of Japan is getting very worried, because again, we know that they have been postponing their hikes, and we all understand that. Sanae Takaichi did probably ask them for this favor, and there we go. Because we know that she's more in favor of spending, and she needs to deliver on the promises that she gave when she was getting elected last year, and you don't need a higher interest rate for that, right? So yeah, long story short, but now that the tides are changing a little bit, I think that now the Bank of Japan is actually again getting worried about that the Japanese yen could spiral here and get so weak that against the US dollar that there would be an issue. Look, if I look at the monthly chart here, you can see that we're approaching this highest point of 2024. You remember, this is when the Bank of Japan also had to intervene, and this is where this 160 almost 2 is the level that I'm watching. And if we surpass that one, well, ladies and gentlemen, we're getting into a bigger problem here. We're getting to levels, we could be getting towards levels which we saw like here, 165. This is the highest point of November of 1986, ladies and gentlemen. Wow, this is where we are right now. And this here, it's a very beautiful chart. Don't get me wrong. This is a very attractive area for a breakout. If we do get somewhere here, I think that this is where a bigger problem arises. USDCHF very quickly, while I'm on the daily chart here, you can see a nice rebound this month. Let me just remove the drawings. A beautiful rebound this month, and yeah, we're seeing this push back up, and let's see if we can break. I mean, actually, we're already breaking this downside line taken from the highest point of May of last year. If we stay above this area, I think that yes, further action to the upside could be possible. So let's keep an eye on that one. Okay, look, ladies and gentlemen, let's jump into gold. Actually, look at this. While I'm on the monthly chart, amazing, ladies and gentlemen, beautiful decline this month. I talked about this several times already in my previous sessions last year. At the end of last year, in the beginning of this year, I said that we're seeing these crazy moves and which cannot last. They cannot just physically last, because whatever comes up must come down eventually. And this right now here, I mean, it's a good proof of that. And common sense prevailed. And what I said before, that I said this last year, I said this in the beginning of this year, that whenever when we'll have a problem, and now we do have a problem, we might see gold and silver getting sold off, because look, the big buyers of gold and silver, like last year, were the governments, and they were piling up on that. Everybody was dragging gold to critical higher levels, and now it's perfect time to liquidate a little bit on that and take a little bit of profits, especially when you do not want to switch on your printing machine, your money printing machine, because then you're going to be causing more inflation. So why to do that if I can just sell off a little bit of my gold assets? I know I will jump back into it, but for now we know that gold could still continue drifting lower, maybe going into next month as well. I still believe that more downside could come here. My beloved targets right now, my targets, my preferred targets right now are these. I'm aiming for the psychological 4,000 zone again, 4,076, and if that gets cleared, yep, I'm gonna lean towards the 3,600 zone, maybe around here somewhere. I do believe in a 50% retracement here from the lowest point of 2022 to the highest point of 2026, or the all-time high, in other words. And I do believe in a 50% retracement, which is roughly around 3,600. I think this is the new, going to be the new norm, around 3,000-ish. And from here, I think that, yes, the market will start buying again. Again, we'll see. Silver, similar story. I think that the 50s are the new norm right now for silver. So I think that we still have some room to the downside here. Very quickly on platinum, just to see what's happening. Yep, still weakness, but very interesting weakness here, which actually could lead to some further declines. And that could actually align perfectly with everything what we saw, what we're seeing in gold and silver. Palladium, yes, I do like this one. Look at the beautiful hold up here. Damn it, this is amazing. 61.8, fantastic retracement here. 1,350 zone, fantastic. Let's see if we can break that. I think that the bears are did not kind of still have a good appetite here, and we could see further declines. In general, if to be very pessimistic, that's what I'm aiming for. I'm aiming for this upside line. And this is going to be back below the 1,000 level. This is interesting. This is very, very interesting here. Anyway, let's jump into, ladies and gentlemen, oil. Yep, WTI oil pushing higher today again. Of course, the problems continue to remain, and we're pushing back to that 100 level on the WTI oil here. Look, I would say it this way. Let me just get rid of this. I would say it this way. Looking at the picture here, if we look at this candle here, this Monday candle, it's a big pull. This is a little correction. Looks like a bearish flag altogether. So if this is a little correction, then I would say there is a chance for some downside. In general, I'm a believer of weaker oil prices, because I don't believe that the U.S. administration, where they're trying to get businesses into the country, that they will need higher oil prices for that. Yes, U.S. has oil. Yes, they do have oil. They can supply their market, but you know, it's if there is a mess in the global arena, then you don't need higher oil prices. So that's why they're all really talking about the Strait of Hormuz right now. You know, it's not even, let's say now, no longer the change of government in Iran. It's now more of a, you know, controlling the Strait of Hormuz. You know, because basically, you know, Iran now wants to put a fee, but I think that the U.S. wanted to do that as well, and that's why, you know, that's why yesterday when I was watching the supreme leader of U.S. Sorry, the U.S. leader. I was like, he said that, you know, that he doesn't. Well, it seems like he didn't criticize the fact that Iran wants to put a fee on the ships passing this in the Strait of Hormuz. So it seems like, you know, I want to control that as well because I want to put the fees as well. So I don't want to sound in the future. Anyway, it's a big hypocritical game. Anyway, long story short, ladies and gentlemen, for now, what we're seeing here is this: that yes, we're pushing higher. Look, I'm gonna get more comfortable with the upside, in my opinion, if we do jump above the psychological 100 level. I think that for now I'm going to leave this. I like this area, this whole area of resistance right here. Let me just grab a highlighted zone. There we go. I'm going to highlight this. I like this. I like this breakout through this whole territory. And honestly, I know that's a big one, but I'd rather be on the safe side a little bit. This is somewhere above the 102.5 zone. If we clear that, I think that yes, more buyers could join in. Anyway, let's have a look what's happening with Brent oil. Yes, this one's also pushing higher, but what we're seeing right now here is a little bit of a correction here. And maybe, just let me just put a Fibonacci from this high to this low, and we're seeing perfect 38.2. Wow, we're very interesting. Let's see if it holds. If it doesn't hold, then I'm going to go for the 50% here on the Fibonacci retracement, which is drawn from the high of the 19th. Actually, you know what? The highest point of March to the low of this week. And yes, 38.2, we're currently sitting at it. And 50% is around 106.5 zone. So let's see if we can reach down. By the way, what's happening with WTI oil in the same side, on the same side, yeah, it's not, yeah, we surpassed the 23.6. We're going for the 38.2. Ah, by the way, my 50, there we go. This is what I was talking about. That's why I want to see a push above this area, because we have beautiful coincidence here. 50% on the Fibonacci retracement here is exactly somewhere around this area. So a clearance of this area, yes, could open the door to some higher levels. For now, we're just watching this. This is the chart that I keep on monitoring, the spread between Brent and WTI oil. And yeah, we're kind of stabilizing a little bit. Normally, it's around 5-ish, you know, but yeah, we have been on the elevated side a little bit lately. Natural gas, very quickly, natural gas pushing back up a little bit, but I think this one's getting stuck here. Now, I want to remove all the drawings, and natural gas, I do like this one, but I want to say that we are currently, I think, a little bit stuck here in a box, in a little box here. So it's somewhere between these areas, between these levels. So look, long story short, if you aren't interested in this, then wait for kind of a violation of one of the sides of these areas. So for the downside, I think that the better option here is to keep an eye on the 2.77 territory. Here is the low of February, or should I say the current lowest point of this year. A drop below that could signal further declines. And this is, by the way, the Henry Hub's. This is the U.S. natural gas. I mean, the European one is a little bit on the elevated side, I would say. And on the upside, well, roughly, again, this little area here, 3.32 zone-ish. Look, in general, keep your eyes on the 50, the 100, and the 200-day EMAs. I think this would be the safer option, you know, to play. So if we can get a move through that, then yeah, I'm gonna get a little bit more excited with the upside here. Okay, let's jump into crypto and we'll wrap up the session here. Bitcoin, not feeling the love today. We're seeing, like I said, we're seeing cryptos kind of a little bit selling off. Look, it's a difficult one right now. Let me remove all the drawings. It's a difficult one right now because overall it looks bearish. overall it still looks bearish, and we're approaching this key area of support, this upside line, taken from the low of the lowest point of this year, the current lowest point of this year. So we're approaching this upside line, and honestly, it looks like a little correction before another possible leg of selling. And if we're going to go for that selling moment, certainly we will watch out for the current lowest point of this year, near the 60,000 mark here on the Bitcoin. If we clear that, then yeah, I'm going to go for lower levels. But for now, I would really like to see a reversal here, a rebound back up of some sort, like maybe a push back above, above the 50-day EMA, and a push towards the 100-day EMA right here, and then kind of go from there. But for now, it's a tricky one, I would say. It's this one right here. This is the upside line, what I'm watching, and if we clear this, I'll go for the downside. Bitcoin Cash. Bitcoin Cash is interesting here, very interesting. And if this upside line gets broken, then yeah, for now, I would say this way, that this upside line is something that I'm watching, and of course, if it also breaks, then we are watching some other levels here, like for example this 445 zone. Look, there's a bunch of levels, but for now I think let's stick to this upside line. If we clear that, I'll go lower towards slightly lower levels here, and then we'll just take it from there. Ripple. Now Ripple is near critical area, near critical support, which is around the 1.3415 level right here. If we clear that, yes, I think that further declines are possible. Ethereum is also near a key area of support. Everything is near support on the cryptos. Everything is really pointing a little bit more towards the downside, I would say. I cannot really lie here. As much as I would like to see cryptos, going higher, I cannot deny that there is some downside scenarios here building up. Ethereum Classic, similar story. We're near the lower side of this range, But again, okay, I understand. Several times we were here near the lower side of this range, and then we kind of rebounded. So yeah, it's I would say a tricky moment here, and it's. If we do clear this area, then yeah, I think further declines are possible, ladies and gentlemen. Litecoin, yep, similar story. After meeting resistance here near this upper side of the range, we're now traveling back down. So let's see if we can go back down. However, somehow Litecoin is the one that's kind of showing me a bit more clarity in general what's happening with the cryptos. Now, what's interesting here is that after we reversed here to the upside back on last week actually, or was it? Sorry, was it last week or was it? No, during the weekend. Yes, during last weekend we reversed to the upside here. We traveled higher. We found resistance, but the reversal happened. Actually, it was a creation of a higher low. If you see here, it's a creation of a higher low, and I'm really curious actually if once again Litecoin is going to give me like a creation of a higher low, okay, I'm hoping maybe this could result in, and this could fruit into something, positive, we'll say, something towards the upside a little bit. Let's see. Again, I don't want to rush into conclusions, of course, but certainly a thought is running through my mind here. Dogecoin, yes, again, we're approaching this key area of support near the 0.0878, 79 zone right here. So if we find support here, then yes, great. More buyers here could join in. If we do break below the 0.0878, then I will go a little bit lower. Polkadot. Polkadot is drifting lower now. This one's really getting hit and really not feeling the love, lately. And we broke through the lower side here of this little box. I mean, we were climbing higher in boxes, I would say. It's like, it looks like a crypto which, if it wants to go higher, it needs to put a box higher and then jump on it, and then next box and stuff like that. But in general, yes, we're seeing some weakness here right now, and honestly, I'm worried that I'm worried that we could see further declines. And actually, let me just put this on the chart here. Actually, I think this is, yeah, this is the level that I was watching here. I think I can get rid of, um, okay, wait, let me just, so for today, 1.30, if we do drop below the 1.30, I think the psychological one level, I think everybody's going to be watching that psychological one level, and this is becoming a little bit of a reality. At least it seems like that maybe Polkadot could hit the psychological one level, and if that's the case, well, this is going to be, I think, a bit of a problem for Polkadot holders. Yeah, in general, it's going to be interesting to see if this crypto is not going to just kind of disappear or something like that. Tron is, well, this one's holding up. Honestly, this one is holding up. It's now it's the only one that's kind of showing resilience. Look at this. And this is pushing higher. And I like the fact that Tron is acting more like a currency pair, and is just living its own life. So look, very simple right now. 0.3208. If we clear that, I'll go to the upside. I'll go higher, and then we'll take it from there. For now, like I said, the only problem that we have some key resistance areas here, the 0.3246. But certainly, we're watching this barrier, the 0.3202. If we can get a nice clearance of that, then great. More buyers here could join in. Okay, ladies and gentlemen. That's kind of it. I think that's it. I'm done with the cryptos. I'm done with everything else. So look, if you have any questions, honestly, feel free to throw it out. Otherwise, I'm going to wrap this one up because I already kind of overstayed my welcome by a few minutes. It should have been an hour, but yeah. Look, ladies and gentlemen, like I said, if you don't have any more questions, I really appreciate your time, your views, your likes, your comments. I hope you enjoyed this session. Again, I tried to cover as many instruments as possible. Right now, we're living through some weird times, difficult times, in my opinion. And look, if you're trading, I would suggest not to keep your positions running overnight, especially over the weekend, because as I said before, normally, big problems happen during the weekend, let's say mostly on the Saturday. Then on the Sunday, they come out and doing some damage control, and then basically the market has initial reaction on Monday, and then they try to fix it, and basically try to calm down the market during the whole week, and prepared for the next attack on a Saturday, the next Saturday. At least that's the pattern right now. Ladies and gentlemen, thank you very much. Thank you very much for watching and listening. I really appreciate your time, your views, your likes, your comments, everything. Kinuthia, thank you very much for your participation. I really appreciate that. That's always pleasure to see somebody. It's always a pleasure to have a dialogue, not a monologue all the time. So anyway, thank you very much, and I'll see you, ladies and gentlemen, next Monday. Yeah, we'll see what the market has prepared for us. Bye for now.